All right, a lot of focus on Asia this morning with the president there, but we're also getting some headlines out of Riyadh, the investment forum there. One in particular I want to ask you about. BlackRock's Larry Fink saying that major U.S. investors are overweight U.S. equities. He's advising investors to be overweight U.S. equities for the next year and a half or so, 18 months. Do you agree with that take? Do you see any issues there?
No, we think the U.S. offers a combination of favorable demographics versus rest of developed world. And we're really running on an innovation economy here. The ability of companies to increase profit margins has been quite astonishing, and we think the U.S. is a leader in that area. We do think valuations are a bit high, so that's an area where you might want to be careful to not be too overweight. But we absolutely believe in the story of the U.S. leading the way through earnings gains.
All right. Speaking of earnings, obviously we get a lot of big earnings this week. It's one of the busiest week of earnings for the S&P. A lot of Mag 7 names reporting. I want to point out something. The earnings for the Mag 7 in Q1, it was pretty close to 30%. It was about 27, 28%. Then in Q2, it was also elevated. The estimate for this quarter, it's 15%. Do you see that as a setup, kind of a low bar that the Mag 7 can just hurdle over and that's going to keep the rally going? Or do you actually believe that earnings are going to come in closer to the estimate?
I think they'll come in between. In other words, I do think the bar has been set reasonably low, and that's across the board, not just in tech. People brought estimates down pretty strongly at the beginning of the year with tariffs. Those have been much more of a non-event than analysts had anticipated. So I do think there's some upside to earnings generally. Specifically within tech, there's been a lot of heavy investment there, and so that may be putting a little bit of pressure selectively on some companies and their earnings growth. But I think investors are generally willing to look through that and look out towards the future, towards stronger earnings gains.
All right. So right now, a lot of people are looking at cyclicals, obviously, with the idea we're going to get a rate cut coming tomorrow. Are you also bullish on the cyclicals right now?
Not directly on cyclicals. The theme that we've been following is that we're still big believers in the technology and innovation theme, but we're looking for that to spread to the users of the technology. And so the spaces where we see the potential to deploy this tech and boost margins are really found more in the consumer and healthcare sector. So we like those areas in a pretty big way. In terms of the cyclicality of the economy, I do think that these interest rates are more likely to help offset some of the weakness that we've seen in credit rather than deploying into a big uplift in terms of economic growth. So we don't necessarily see a big cyclical uptick in the economy, but rather steady as she goes.
All right. What's your view on tariffs? Of course, the president's over in Asia right now, hoping to strike some deals, laying out the framework to a number of deals for Southeast Asian nations. China's the big one. You say tariffs seem like a yesterday story. We actually just heard from the IMF head earlier, and she believes that trade uncertainty is at an all-time high. Why do you think it's a yesterday story, at least now, until we get a final deal?
Well, I think we hit peak uncertainty on tariffs back in April. And since then, what we've learned is that while the uncertainty is still there, the picture is becoming clearer by the day. As deals get struck and as exemptions get made, we're better able to calculate and estimate what the effects are on the overall economy. And they've been far less than advertised in terms of the expectations that people had back in April. So I agree that it's still a very big and important issue, but it's one that's mostly in the rearview mirror in terms of drag on the economy. Companies have shown the ability to navigate this as well, and that's one reason why earnings have been doing so well in spite of the tariff backdrop.